So I'm going to address the 800-pound gorilla in the room. This is a topic that's going to make some people really happy and it's going to really piss some other people off, and I'm okay with that. One question that I get frequently is, why are interest rates not the same with different lenders? I'm going to explain that in detail today so that you walk away with a thorough understanding of the back end of how our industry works. So I'm definitely not trying to pick on any particular lender, but just for the sake of illustration, I'm going to use Rocket Pro just because they're such a well-known lender. So when you see a commercial on TV and you reach out for a mortgage to Rocket Pro, you are going to speak to somebody in their retail division. If you were to reach out to a wholesale broker, they would have the option of taking that loan to Rocket Pro through the wholesale channel, which is in essence a completely different business. Now, what are the primary differences between retail and wholesale? To cut right to the point, retail has a lot more overhead. They're spending millions of dollars per month on marketing. They're spending a ton of money on retail space. You have layers of management, area managers, regional managers, branch managers. You have underwriters, you have closers, you have post-closers, you have compliance people. You have all these people that have to get paid off one single transaction, and that's not cheap. The only way to pay those people is you have to have an increased margin to generate enough revenue so that everybody gets paid off that particular transaction. Make sense? Okay, moving on. Now in the wholesale division, it's a whole different animal because they're not spending all that money to generate that deal like they're doing in the retail division. So just as an example, one of my realtor partners calls me up and says, "Hey Eric, I need you to pre-qualify this buyer." We pre-qualify the buyer and send them through a wholesale channel. That wholesale channel did not spend a single penny for us to bring that buyer over to them, which saves them a tremendous amount of money. Secondarily, you don't have all those layers of management getting paid on the wholesale side the same way you do on the retail side. So using my company, Reduced Fee Mortgage, just as an example, all the management is internal, so the wholesale lender is not spending any money to have to deal with any of that. So without diving too deeply down this rabbit hole, what does all of this mean in the end to the client? With retail, you simply have to have higher margins to sustain all those expenses. It's not like they're trying to do anything wrong. There's just more overhead, and that's the way it is. Whereas on the wholesale side, you simply have less expenses. Less expenses means lower margins. Lower margins means lower interest rates. So for the sake of illustration, to give you an example, something I frequently do is I'll run a comparison for somebody between the same lender in their retail division and that lender's wholesale division. And frequently what happens is, for the exact same cost that's being quoted by the retail division, on the wholesale side, the interest rate typically ends up at least 0.5% less, in many cases 0.75 to 1% less. I've even seen extreme examples where it's maybe even as high as 1.5% less. I just ran into that about a couple of days ago with a client. So in our industry, compliance does not allow us to say things like we have the lowest interest rates or lower interest rates or generic terms like that. Those are trigger terms and they're not legal. But what I can tell you is that the Consumer Finance Protection Bureau, otherwise known as the CFPB, literally released something a while back saying that 78% of consumers went with the first lender they talked to without getting a second opinion, and that is simply a bad idea. Clients just don't know what they don't know, and that's okay. But if you were buying a blue Honda Accord for $20,000, but if you knew that you could go down the street and get that exact same blue Honda Accord for $15,000 with the same mileage, same wear and tear, same everything, of course you would go pay $15,000. Why would you not do the same thing with the biggest investment of your life, which for most people is their home? We have positioned ourselves in this market as what I like to call a second opinion lender. So if you've only gotten one quote, do yourself a favor and at least get a second quote to make sure that the rate you're getting and the fees you're getting are truly competitive. For anyone looking for more information about some of the things I chatted about in the video today, simply give us a call at 651-994-9494, or you can email me, teamoros@reducedfeemortgage.com. For more useful information like this in the future, be sure to like, subscribe, and follow us on Instagram and Facebook, which you can find down below. Thank you for spending some time with me today, and I look forward to seeing you in the next video.